Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense, brought to you by the CFA Society of the Cayman Islands. Your host this morning, myself, Amy Hubble, joined by my colleague, Jessica Jabbnowski, the Managing Director of Radix Financial Cayman. Welcome back, Jess.
Thanks for having me again.
Absolutely. Well, it's Halloween, so we thought that we would talk about the absolute scariest topic imaginable, the U.S. election. Now,
frightening.
Yeah, absolutely. Spooky stuff. So if you've been living under a rock the last 6 months, it's happening next Tuesday. And I should point out that both Jess and myself are American citizens, and we've both already cast our absentee ballots, right?
We have.
Yes. And so just to set the scene, really for the conversation, and for those who may not be as familiar with kind of the U.S. election procedure, the U.S. operates under kind of a two-party system. There's, of course, the conservative Republican Party and the more progressive Democratic Party. Now, the U.S. will be electing a president, of course. We have former President Donald Trump on the Republican ticket versus Vice President Kamala Harris on the Democratic ticket. Now, if Vice President Harris wins, she would be the first female U.S. president. So, good things there. But it's not just the president, right? So Americans will also be electing their congressional representatives. In the House, all 434 seats are up for election. The Republicans currently control it. And in the Senate, only 34 seats are up for re-election, where the Democrats currently control the 2 seats. So just what is the path to victory here? I feel like we're sports reporters to do. What's the strategy? How do you win?
There is a strategy. I mean, so the U.S. elections are not purely based on popular vote. So it's not whoever receives the most votes by the population wins the presidency. They follow what is called an electoral college system to elect the president and vice president. So basically, the electoral college allocates votes based on each state's representation in Congress. And that varies by the total population in that state. So in total, there are 538 electors across all the states. And a candidate needs 270 of those electoral votes to win the presidency.
270, okay.
So the path to 270. How do we get there? Voters, individual citizens cast their votes within their state of residence, and then typically the state uses a winner-take-all system whereby whoever is the majority within that state gets all of the electoral votes for that state. There's 2 exceptions, Maine and Nebraska, and they allocate votes proportionally. But in general, we're kind of looking for a state to vote one way or the other.
Yeah, so like a state like Texas or California, even if it's like 51% to 49%, all of their votes are going to go to the 51%.
Exactly.
Yeah.
So effectively, this system can lead to a candidate winning the presidency without actually winning the popular vote amongst all of the citizens in the country.
Has happened several times, I feel like, at least in my life.
It's happened 5 times in total, historically. So you'll remember Hillary Clinton won the popular vote, but Donald Trump won the electoral in 2016.
I remember that one.
You remember that one. And then in 2000, Al Gore had the popular vote, but George W. Bush was declared the president. And the other 3 happened back in the 1800s, so
yeah,
I don't remember those.
Yeah. Well, I mean, it does make me a little uneasy, at least going into election night, and especially when we talk about like that Hillary Clinton night. I remember I feel like I was at a watch party, and I had left the party to go because it just like was such a surprise, and even though she'd won the popular vote, that obviously didn't win the electoral vote. But it's, I mean, I do think that I know there's a lot of rhetoric out here, and this is kind of what we've been telling our clients, what we've been telling ourselves, I think, is, it is certainly, not good that we have a candidate that's basically said, I am not going to accept the results if I lose. And so that is certainly something to make everyone uneasy. But I don't necessarily think that is going to affect the democratic process happening. Now, do I think that if he loses, and I don't know if he will lose or if he will win, but do I think that if he loses, he's going to get on the phone and call Kamala Harris and congratulate her or make a concession speech like we would have traditionally expect a loser of a presidential election in the U.S. to do? wouldn't hold my breath. What do you think?
Yeah, I'm with you on that. I don't think that he will readily concede. I agree that I think we will have a result on election night. Like there will be a declared winner. How he responds to that, if it's not him, is to be seen. But I don't think it will actually change the path to presidency.
Yeah, I mean, certainly none of us want to see another January 6th event, and I would hope that wouldn't happen. But exactly, it is not just his opinion on whether or not he won or not that necessarily determines or allocates the presidency.
Absolutely. And honestly, this race is very, very close. If you look at the most recent national polls, they have Kamala Harris ahead by just a bit, but potentially with Trump predicted to win the electoral vote. And it is going to come down to 7 key swing states.
And what are they?
So, these are kind of intense battlegrounds. They're all very tight, and they've historically, in the last election, they basically decided the winner. But they are Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. So outside of those 7 states, it's pretty clear they're going to go one way or the other. But those 7, they're just so tight. They're too tight to call the race in each of those, and they're really going to be what decides this election.
Yes, it's kind of a funny system when you think about it. Obviously, we're used to it being American citizens, but it is so strange that it comes down to, those really every single vote in those 7 states is really what is determining the presidency. And I come from a state that is not one of those 7 states, but I also know that none of the candidates even spent any time there this election cycle because it was such a foregone conclusion. But I guess anything can happen, but I think it's pretty unlikely that there's not several of those states that have kind of already punched in terms of what the expectation is going to be. But these pollsters don't know any more than we do.
That's true.
As far as what's actually going to happen, on election day, right?
Yeah. So what do you think the election result ultimately is going to mean for the stock market?
Well, the stock market,
let's bring
right?
it back to our
right,
favorite
exactly
topic.
right. That's the point of the show, right? Money sense. What is this election actually going to mean for our money? And yeah, I 100% think that we are going to see some serious volatility next week. Volatility can be upward, volatility can be downward.
We have been seeing it already.
Absolutely,
in the last few weeks.
It's mostly been to the upside, honestly. The S&P 500 is up 22% year to date, so certainly nothing to sneeze at. But the markets don't know really any more than we do at this point. I think in some ways that's good. In some ways that's bad. And kind of, again, like going back to 2016 when Hillary Clinton was running against Donald Trump, all the pollsters said, this is going to be Hillary's race. Hillary is going to win this. So the market kind of had a chance to, I think, price it in, right? So the market before the race had kind of already decided that it was going to be Hillary. And so I remember, again, that night, I left that party to go home and write a comforting letter to my investors because the market had absolutely just tanked on after hours.
Mm-hmm. I remember.
Yeah, but by the time that we woke up and the bell rang the next day, it had opened positive, completely changed its mind in terms of what that had happened. I got no sleep because I'd been writing a don't panic type email, but that's not what we're going to see this time because the market, it is so close. It is so tight. The market cannot preemptively kind of price these things in. So I think we're going to get, especially on Wednesday and as the next week kind of unfolds, I think we're going to see some back and forth just kind of as the market kind of decides how it wants to respond to whatever the outcome is.
Yeah. And I think it's important to take a step back and let's look longer term. History shows us that the stock market has experienced long-term growth regardless of election outcomes.
Absolutely.
Through Democratic and Republican presidencies. And honestly, presidents often receive too much credit and too much blame for economic conditions. The real drivers of the long-term market growth are those underlying economic conditions, like interest rates, inflation, GDP growth, employment, consumer confidence, etc. So what do we as investment managers how do we kind of prepare for this and handle this? And, we're prepared for this volatility in the short term. We're looking to kind of take advantage of any specific opportunities that we see through that. Yep. But we're also very careful not to let the noise and the election rhetoric impact our longer term strategy, because we know that in the long term, that's not what drives markets.
Yeah, absolutely. I couldn't agree more. That's absolutely what I'm telling my clients, and what I'm doing with my personal money too. I certainly think that we could see some volatility if we see some opportunities. May do something next week, but in terms of what happens on a single day, what happens in a single week, completely 100% inconsequential to my long-term goals.
Yeah. And you take the other side of that, like, well, there could be new policy coming into place that does affect things longer term, but these policy shifts, they take time to implement. Yeah. It's not something that happens overnight. And the split between who's in the Oval Office, who the president is, which party, versus who controls Congress really is a bigger determiner of how much presidencies can actually get done policy-wise.
Yeah, exactly. Especially the kind of, I think about the magnitude of some of these policies. But with that, let's take a short break and come back and continue our discussion on the stock market, interest rate markets, and what this might mean after the U.S. election next week.
Radio Cayman News.
Police are called to Cayman's third homicide of the year.
36-year-old Jamaican man was shot outside his home.
Accused of stalking a man with whom he had a prior sexual relationship.
A large proportion of the population are living with undiagnosed conditions.
Radio Cayman. Your voice, your choice for today's biggest news.
Hi, I'm Kathy Miller. Join me on Radio Cayman's Business Buzz every Tuesday and Thursday from 7:30 to 9 a.m. and the second and fourth Thursday of each month from 8:15 to 9 a.m.
If you're a business owner
or part of one, Business Buzz is your source for the latest initiatives, developments, and varied viewpoints from the local business landscape. Be part of the Business Buzz with me, Kathy Miller, every Tuesday and Thursday morning on Radio Cayman.
The Business Buzz. This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
All right, welcome back to Money Sense. Before the break, we were talking about the U.S. election and what that could mean for the stock market and, of course, for our money. And Jess had just pointed out what I think is something that I want to pick up on in terms of having a split Congress versus a split presidential candidate. And actually, from my perspective, and honestly from historical stock market perspectives, I think that is actually the best case scenario for a lot of these elections. I was looking at some of the data, and in both cases, whether or not there was a Democratic president or a Republican president, the stock market performed the best when there was a split or divided Congress, which means that either the Senate or that the House of Representatives were controlled by Republicans or controlled by Democrats. And when I think about that, you kind of think about, these candidates are out on the road and they're making wild promises, right? But when it actually comes down to making policy, if you have a president and both houses of Congress under the same party, you really can enact any policy that you want. It doesn't happen very often. Mm-hmm. But that is really the only way that these candidates would realistically be able to kind of, at the magnitude that they've been saying, implement some of these policies. So at this point, they're really just kind of hopes and dreams in terms of what they would like to do, versus when you have kind of those checks and balances in place with Congress that you have to work together, make compromise. A lot of the strength or magnitude of some of the policy kind of changes, I think, get pared back a little bit more. And so I think, a lot of people try to say, well, if Donald Trump wins or if Kamala Harris wins, this will happen exactly in kind of what their policy playbook has said. And I just don't think that that's in any way going to be the case. But
it's not the reality.
No, it really isn't, because we do have to, and that's the way the system's built, is to have checks and balances within the system.
Mm-hmm.
And so the stock market, I think, will 100% like best the idea that there is going to be some checks and balances, because it means that not everything is going to move with such strength. But okay, beyond stock market performance, this election could potentially have economic impacts for us here in Cayman, simply because the CI dollar is pegged to the U.S. dollar. And so we are effectively importing the economic policies, and especially the interest rate policies, of the U.S., right?
That's right. So effectively, Cayman Prime, which is the rate that Cayman banks quote loans in, it follows New York Prime. New York Prime is the U.S. federal funds rate plus 3%. So when the Fed changes those rates, those changes filter through to the lending rates here in Cayman. So where are we today? The Fed in the U.S., which sets interest rate policy, just decreased this rate in September, where it's now sitting at approximately 5%. Economists broadly believe that interest rates will continue to slowly drop over the next couple of years, as long as we don't see any meaningful return of inflation.
Right.
So, do we think the outcome of this election could change that plan? That's the question.
Well, I think we need to answer it in two different pieces, because short term and long term are two different answers on this piece.
Yeah, absolutely.
So what do you think? What do you think on the short term, first of all?
So short term. So
like very short term. I mean, like week.
So Fed meets next week.
Sure.
So the election is Tuesday next
Thursday.
week. The Fed meets on Thursday to decide on interest rate policy. So I think it's likely that the Fed will drop rates as is widely expected.
Me too.
Further next week, given we've got moderating inflation coming through. They're also going to factor in the weaker GDP number that we saw yesterday, and we have the October jobs report coming out tomorrow.
Yeah, tomorrow.
This jobs report is probably going to be a little messy. It will include the impact of the two recent major hurricanes that have hit the U.S., and there's ongoing strikes at Boeing that are going to be shown in these numbers, and then there was a brief strike at the U.S. ports last month. So ultimately...
So you think the number will be higher? Or, I mean, it could be higher, just cleanup efforts, but I mean, I guess you're assuming that the number would be maybe lower.
I'm assuming the number would be lower based on strikes, people not working, and people not able to work for a period due to disruption from the storms. So, but, I think the Fed will also probably look through that, because they know these things have happened.
There's just so much going on right now, at least in my opinion, in this week, that, not to say that it's already a foregone conclusion, but obviously we didn't have a meeting in October. There's been a lot of data for them to look at. Obviously, this GDP number, dropping from 3% to 2.8%, not a good number, but also not unexpected from the Fed's perspective, right? Kind of in line in what
still within
they expected to see. Obviously we've got this jobs report on Friday, going to depend on just again, if we see a very weakening market, jobs market at least, that would kind of spur the Fed to either speed up their rate of decrease in interest rates. So maybe they would do 50 basis points, maybe 25 basis points. But I'm kind of with you in that there is just so much swirling right now that it's hard to believe that they would put too much emphasis on at least just the jobs number that we're going to see tomorrow, when we have obviously the inflation or the election on Tuesday, and then the meeting pretty quick on Thursday. But it is, I mean, I don't think that they are going to care who wins.
No, that's right. I in the short term, I absolutely believe that the election results do not impact things. I mean, Jerome Powell, the chairman of the Fed, has consistently emphasized that the Fed makes these decisions independent of political influence, and just basically based on economic data and their long-term goals. So over the short term, no, I don't think the election results change next week's decision.
I wouldn't think so either. And I mean, long term, maybe a little tougher to say, and it's not necessarily that the Fed is going to say who's the president, but again, going back to what magnitude of policies go into place after, again, next year. We're talking, there are some policies that I think could have some bigger risk for us here in Cayman. I think that's obviously the topic of the show. And I mean, specifically, I'd say that the biggest political risk would be Donald Trump's kind of promise of increased tariffs. He's basically said that he wants to propose a 10% tariff across the board for all imports and a 60% import tariff on all goods from China. Mm-hmm. Now, I think most economists and myself would agree that, raising tariff levels could, really substantially slow down economic growth, right? I mean, the fact that the American consumer continues to spend is what makes the world economy go round right now. That's right. And it could also, of course, drive up consumer prices. And I think we understand that here in Cayman very well because we have an import duty, and it has the exact same effect on prices of goods, right? We know that having to pay an import duty means that those prices are going to be higher. And it's going to be pushed down to ultimately the consumer. And so higher consumer prices in the U.S. mean less disposable income for tourists to come here and spend money here on our beautiful shores. And more importantly, likely higher interest rates to counteract basically that inflation.
That's right. Because higher tariffs it will have inflationary impact. And we know that one of the Fed's dual mandates is to combat inflation and keep it at their long-term target of 2.5%. So that will potentially have an impact in the longer term. And I think, things also get interesting. Assuming a Trump win again, he's made it very clear that he believes the president should have a say in Fed decisions.
Of course he does.
What do we think about this?
Well, Donald Trump has certainly promised that interest rates will be low under his presidency. But that's not the job of the president. That is the job of the FOMC, or the Federal Open Market Committee, which is led by Jerome Powell, and that is a historically nonpartisan group of nerdy PhD economists. Mm-hmm. And I would really like to see that stay that way. But, I mean, I think it's important to remember that Trump did appoint Jay Powell in 2017. So, I think...
He did, and then he started criticizing him about the decisions he was making when rates were going up.
But he is bringing rates down now. So I think at least as long as they stay on that path, then I don't think it's going to... Okay, I don't think it's going to be a day one priority for Donald Trump to fire Jay Powell.
Certainly not in this trajectory.
I hope not, geez. But yeah, I do think that the Trump has repeatedly said that he would like to control everything. So that's not really out of character for him. But again, anything said on the campaign trail is a hot check as far as I'm concerned. From that standpoint. But we don't know what happens under Kamala Harris presidency either. Joe Biden, actually reappointed Jay Powell as chairman of the Fed. So, you kind of have both says. And I think that says a lot about Jay Powell, just the ability for him to absolutely walk that political line. And I mean, I've heard him speak 100 times. Every time he opens his mouth, I'm listening. And he is really a master of avoiding, political entanglement, mm-hmm. or letting. I mean, he goes before Congress and he lets those senators just ask him just the most bizarre questions, and I'm always just I would be just enraged and I'd be rolling my eyes every single question, and he does just an incredible job, I think, of staying so even keel and very, very much to the point and exactly what data that they're looking for to do it. So I'm a fan.
Yeah, he absolutely emphasizes the independence that they exhibit when making these decisions. And that's important, I think. We shouldn't have political influence on those economic decisions.
Yeah. So last point that I want to bring up, because I think a lot of people at least ask me, and I know ask you too, in terms of a lot of people are coming up with their mortgages, talking about whether or not they want to refinance, whether or not they should be locking in, how long they should be locking in. What are you telling people?
Well, listen, this is obviously individual to specific situations, but it really depends. In terms of whether to just purely lock in a rate for the short term versus go variable, I've been recommending to go variable at this point in time because we are trending downward, and I think just the fixed rates that I have seen that the people have presented to me that they've gotten quoted from the banks, I think that they'd be better off going variable. I think it will ultimately be longer, and over those time periods it will work out. But what are you telling people?
Yeah, I'm telling people the same thing. I mean, I think a lot of the banks are kind of promising like a fixed rate, almost right where we are right now for 2 years or something, and then variable, where we're kind of saying, I think that rates are likely to come down. I think the Fed has said that their neutral rate is kind of between 2.5% and 2.75%. So for us, that's going to mean, between 5.5% and 6%. So, and I think we've talked about it, obviously, is, you're probably not going to be looking to get anywhere under 5% probably. But otherwise, I'd take that variable option, at least in right now days.
Yeah, and I think don't have the expectation that we're going to be back where we were 3 years ago
not.
from mortgage rates. But I think we are headed down from here, and everyone seems to get different quotes from their banks, so feel free to reach out to us for an opinion if you'd like one.
Absolutely. All right. Well, we have run out of time, as always. On behalf of CFA Society Cayman Islands, thank you for tuning in. And we want to remind you that a few tickets still remain for the Cayman Investment Forum. It's going to be the 10th annual. It's going to be held a week from today on November 7th at the Indigo Hotel. And I believe that Radio Cayman is going to be live there broadcasting. This year's topic is Futurology, What's in the Mix? And it's always a great event. So visit www.caymaninvestmentforum.com to register. And with that, we'll say goodbye and look forward to joining you again in 2 weeks' time.
Happy Halloween.
Happy Halloween.